Something very different is happening with Bitcoin right now. As price pushes into new all-time highs, institutional capital is flowing in at a record pace. Abu Dhabi's sovereign fund has accumulated 4,678 Bitcoin, nearly 5% of its portfolio. Wisconsin's pension fund added 3,442 Bitcoin, about 1% of their total assets. These are not small, speculative positions. These are strategic allocations by major institutions, and they're happening right now, with Bitcoin at its highest levels in history. So that begs the question, are these institutions pouring in money at the worst possible time? Or is this unprecedented flow of capital into Bitcoin pointing to a much bigger rally ahead for this asset class? In our opinion, the evidence is beginning to point in one direction, that this wave of institutional capital may be laying the foundation for a much bigger bull market. And in this video, we'll walk through why that could be the case. One of the potential reasons institutions may still be buying even at all-time highs is because this bull market hasn't shown the kind of blow-off-top behavior we've seen in the past. Instead, this market has been marked by consolidation phases, followed by gradual legs higher. Pullbacks are more drawn out, and rallies are less aggressive, limiting the kind of euphoric behavior that often marks the end of the bull market. Look at this chart, for example. This move up here was the 2017 bull run. This one was the 2021 bull market. Both were fast, explosive, and ended with sharp reversals. Now, look at the current bull run. No vertical surges, no big collapses, just a steady grind higher. So, this bull market is unfolding more slowly and could naturally last longer compared to the fast, euphoric runs of the past. This is something we've talked about extensively in our recent videos. The current bull market that is taking place on Bitcoin is very different to anything we've seen before. There's one metric in particular that helps explain the shift in Bitcoin's behavior. That is Bitcoin's volatility index. This index measures how much Bitcoin's price fluctuates, on average over the past month. Higher readings means Bitcoin is experiencing larger daily swings, and lower readings signal more stable price action. For example, if the index is at 5%, it means Bitcoin has moved an average of 5% per day in the past month. Between 2011 and 2021, Bitcoin was consistently volatile, often moving over 9% multiple times. But over the past few years, Bitcoin's volatility has been in a clear downtrend. In fact, if we look at Bitcoin's one-year volatility, so the price movement in a year's time, it was around 100% in 2018, meaning the price could double or get cut in half in just a year. Today, that number has dropped to around 50%. That's roughly in line with major tech names like Nvidia, Meta, and Tesla.